In this video, I decided to discuss three of the most hated sectors or industries and talk about some few stocks here in the stock market. A lot of people would call this maybe contrarian investing or sector rotation, meaning trying to look into stocks that people don't really want, stocks that are underperforming as they will most likely eventually outperform in the future. This tends to happen very often in the stock market. Like in 2021, the market had its favorites, which were the EV stocks, a lot of the kind of clean energy and all these kind of things. In 2022, these stocks were the worst performers. Tesla crashed. A lot of the EV stocks, NEO and many others, they crashed massively. But then you had the oil stocks that were shining in 2022 after being hated in 2020 and in early 2021. And then the same thing in 2023, and now in 2024, we have something a little bit different than AI stocks, which are actually shining. A lot of small caps and micro caps. I could see it in my own portfolio. A lot of the stocks that I've been buying in 2023, they were flat, and in 2024 I had a massive year so far compared to the S&P and the Nasdaq, which I underperformed the Nasdaq in 2023, but this has not been the case in 2024, and I'm seeing it with my own eyes. And I see three amazing sectors and opportunities. If you label yourself of a more of a contrarian investor or something, you like to look into stocks that are being hated, I have three sectors, and I'm going to talk about some individual stocks here in the video. Now, in my opinion, one of the most hated sectors or industries or whatever you want to call it in the stock market right now is mainly within the gold mining sectors or gold stocks in general. Now, if you look at these stocks, something like Newmont Corporation, which is, I think, the largest gold miner in the United States or maybe globally, it's down 26% over the last 5 years. So dividend on this thing is like 4.8 or 4.9%. Franco-Nevada, this is an amazing high quality kind of a royalty company, which they don't only own gold, they also own oil and some copper assets and silver and many others. This one is down 16% over the last year. And this is rare for Franco-Nevada. I'm going to talk about it in a little bit. But then you have a stock that I talked about before, which is Sandstorm Gold. It's down over 19%. I have a trade that I've been doing on Sandstorm. I'm going to share it with you in the video. I normally only share these things in my own group, but I'm going to share it with you in terms of options. But all these three stocks are down. Now you have to know that a lot of them have problems with their own mines. Like Franco-Nevada, they have a problem with their mine. Sandstorm, they have a problem with the mine that's not even generating free cash flow yet. So the free cash flow is not even affected in the present, yet the stock is making massive moves to the downside. And if you look at this very interesting chart, and it's mainly gold versus the GDX index, which is the senior gold mining stocks like Newmont, Barrick Gold, and many of these stocks. Now these indexes, they were trading together between the price of gold and a GDX, which you would expect. But in late 2022, you saw a divergence, and this divergence has continued. Even though gold is sitting at over $2,000 an ounce, and these companies are more profitable than ever, you still have the GDX trading much lower. There's over a 30% gap. So if they do close again and they do correlate again, you have over 30% on the upside just if this gap closes again. Now, I don't believe gold is going to 1,500 an ounce. I don't think so. And I don't believe GDX is going to keep going lower for any longer. What I personally believe will happen, I think the orange line, which is the GDX, the gold mining stocks, gold stock in general, they're going to rally and eventually close the gap with gold itself around $2,000 an ounce, being more profitable than ever. This is over a 30% upside, and it could happen very, very quickly. This is what happens with the gold stocks. People hate them, no one wants to touch them. When they start going up, people start FOMOing into the gold stocks and they go higher, and then they FOMO into them and they go higher. And this is normally how it works in the gold sector. But for most people, I would say Franco-Nevada is the best option. It's the safest option in my opinion. You could look at the stock. It's not your typical gold miner. They are more of a royalty company. They take it and they reinvest it. Like in 2020, they bought a lot of oil assets for dirt cheap. I mean, they made a lot of returns with that stuff. They're pretty smart management. So I think Franco-Nevada is the best of the three. They are label themselves as more of a low risk because they have 65% in gold, 12% in oil, 3% in gas, 10% in silver and other mining activities. But they recently have a problem with the Panama mine, which makes up 22% of the assets. So it's not as low risk as you would believe. And you have to study these companies and be very careful. But I still believe Franco-Nevada is the best option for most people, trading at 25 times free cash flow, which is very cheap for a company that has over 50% net income margins. I mean, these companies are extremely, extremely profitable, amazing business models. I mean, an idiot can run these companies, trading at 25 times free cash flow. The lowest it has traded over the last 5 years was 23 times, and now trading at 25 times, and it traded as high as 56 times. So you're buying it at the lower end of the range versus what it was before. And I think Franco-Nevada is the best option for most of them. Now, what I'm doing on Sandstorm Gold, what I'm trying to do on the stock, I'm going to share it with you here. And it's mainly I've been selling put options. There's a $4 put for January 2025. Now, this put options offer more than a 12% annual return from me just selling it. So if I just sell this option, I'm going to get a 12% annual return in terms of a premium. And if I do get assigned, my adjusted cost basis is $3.50 per share, which is dirt cheap for me for Sandstorm. I did a video on it before and I understand this company very, very well. And I think if I do get assigned, I hope I do, $3.50 is, I mean, it's just the best deal in the world, in my opinion. So I'm happy to make 12% on some cash that I had on the side, selling put options on Sandstorm Gold. And if it doesn't move anytime soon, I'm fine. I'm still getting my 12%. So it's a win-win for me. And I love doing this on Sandstorm. I explain more about options in my own group if you're interested in learning. The link is in the description. But in my opinion, the gold stocks are, I think, one of the most hated stocks or sector in the stock market. And these are these three stocks I talked about. And I think most people should stick with a large royalty company like Franco-Nevada. Now, the second most hated sector that comes to my mind is mainly around pharmaceutical healthcare stocks. You have something like Pfizer is down over 7% year to date. Humana is down 22% year to date. I'm going to talk about Humana. UNH, United Healthcare Group, is down 3%. You have BMY, Bristol Myers, down 5.5%. Now, I think you know my opinion on Pfizer and Bristol Myers. I think these stocks are extremely cheap. I think they are amazing, one of the best buying opportunities in the stock market, especially Pfizer is just a little bit more safer than Bristol Myers. But if you're more of a risk taker, I think Bristol Myers is offering an amazing buying opportunity. In terms of Humana, I'm still watching this one. It's almost on my watch list. I have a price target of around 260 to 270, meaning if it gets to $270, I will most likely open a position and dollar cost average down. Now, it's almost impossible. You believe it could reach like 260 or 270. It's trading at 366, and you should trade at like $500 per share. But this is just my fair value on the company. I still think it's a little bit overvalued. But one of the reasons why these stocks are down is, of course, some of it is due within their specific sectors, within their specific business models. Some of them have issues, but it's mainly also, I say, because of what's happening in 2024, which the election is coming, and a lot of people tend to panic around these stocks, and they tend to sell off going into elections because of uncertainty of maybe new policy is going to happen, it's going to affect them in some way, or what could potentially happen, who could be the candidate. So sometimes they do decline on uncertainty going into elections, and this has been the best time to buy compounders like UNH, like Humana, and maybe Pfizer and Bristol Myers, which are not the best compounders, but I think they're getting pretty too cheap to ignore. So the second most hated sector, in my opinion, in this market, outside of the gold mining stocks, which are my favorite, are mainly these stocks: Pfizer, Humana, UNH, pharmaceutical, healthcare stocks, if you want to call them. And I like Pfizer and BMY. Humana is on my watch list, 260, 270. I think would be an amazing buying opportunity for me on Humana stock. Now, the third most hated sector or industry or stocks in the market, which is not as cheap as these stocks, is still not the best opportunity, but it's also on my watch list and it's getting there. And it's mainly a lot with the defense sector, like LMT, Lockheed Martin. Even though the S&P is up, the Nasdaq is up, the AI stocks are up, LMT is down 7% year to date, even though they have a massive backlog that would last them for years and years to come. NOC, Northrop, is down around 4% year to date. You have other stocks, General Dynamics, and many others. They're also down a lot year to date, 7 to 10%. Some of them are down 12% year to date. Now, it's not the best value in the market, like LMT. To me, it's not the cheapest stock in the market, but I think these stocks are getting pretty close to fair value. They are mainly selling off. Mainly, they went up on the war stuff, and now things are cooling off. They're going down. They also tend to go down into elections because of uncertainty around defense spending. Are they going to increase defense spending or not? By how much? Even though they have massive backlogs and they will not be affected a lot in terms of defense spending in the near term, over the long term, defense spendings have been rising and it will continue rising, especially after what happened with the Ukraine war. A lot of the NATO countries, they have been trying to increase defense spending to 2% of GDP. So this is bullish for defense companies in the United States, like Lockheed Martin and OC. They have a massive, massive moat in terms of LMT. I would expect it to close the gap. They have a gap on the stock around like $400 or $401, and I would expect it to close the gap. This is the most likely scenario. And I think under $400 per share, LMT is a stock that's trading at a fair value. You could say a high quality stock trading at fair value is LMT below $400 per share. And I do have LMT on my watch list around $400 or below. And this was not financial advice. It was my opinion on the 3 most hated sectors, industries, stocks in the stock market. I really hope you enjoyed this video. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.